You mentioned about policies earlier. We understand you are very experienced in the fund management sector.
Just old.
And how do you see the various market potential in Hong Kong on the back of the initiative of the government?
It's important to understand Hong Kong as an international financial centre as it currently stands. So it remains a regional centre for capital markets supported by a long-established world-class ecosystem. It serves as the largest centre in the world for arranging Asian international bond issuances, and it's leading Asia in the sustainable debt market growth driven by government issuance. It's now within the top 10 jurisdictions globally in terms of green bond issuance. This is a strong area of focus in our emerging economy or evolving economy. As you would expect, it's home to the world's largest offshore RMB deposit pool, which accounts for half of all offshore RMB deposits, and it's been the top offshore RMB clearing hub, handling about 80% of global RMB payments. And this liquidity provides the necessary support for the growth of Hong Kong's offshore RMB or dim sum bonds market. In 2023, we saw a more than 80% increase year on year, and the issuance total in RMB, which is roughly approximate to Hong Kong dollars, 785 billion or more actually. We remain the regional centre for equities, and although the Hong Kong Exchange has struggled recently to retain its historically high rankings in the global IPO markets, it's important to note an announcement earlier this year by the China Securities Regulatory Commission, the CSRC, that it would facilitate listings in Hong Kong by the mainland's industry-leading companies. And this is important because along with the Connect schemes that we will talk about shortly, it shows the strong support from the mainland for Hong Kong to deepen its role as an international financial centre in China. And complementary to this, in recent years, the exchange has enhanced its listing regime to welcome fast growth companies in the new economy sectors to list here. So by market capitalisation, the share of new economy stocks in Hong Kong has gone up 36%, to 36% from 22% in the last 5 years. The new Chapter 18C regime was launched last year to facilitate the IPOs of specialist tech companies. So this provides another channel for developing the whole tech ecosystem. Through the Connect schemes, Hong Kong offers unique channels for inbound and outbound capital flows to and from mainland China. They allow, for people who are less familiar with these programs, they allow international investors to access China onshore, but through accounts held in Hong Kong, so within the Hong Kong operating system, and for onshore investors to access offshore investment, helping to diversify their available options and returns. They leverage the two systems existing within one country, and this has very strong support from the mainland government as an important mechanism for the ongoing opening up of China's markets, further underpinning the importance of the maintenance of two systems. So there are separate Connect schemes covering equities, bonds, ETFs, swaps, and most recently the wealth management products. And I think it's really important to remember that these programs are intentionally small in scope to begin with, and then expanded in a controlled fashion. And then we see growth in both the north and southbound flows commensurately follow. So northbound is from Hong Kong into the mainland, and south vice versa. The flagship Hong Kong Shanghai Stock Connect was the first, launched in 2014, and now covers 80% of the equities in both Hong Kong and mainland markets. And to build on its success, there's still ongoing expansion of this program. In the pipeline are things like block trading, RMB counter inclusion, and REITs. As at the end of last year, the cumulative net buying flows for northbound were RMB 1.8 trillion and southbound 2.5 trillion, respectively. Quite sizable flows.
They are, yes.
So Wealth Connect, Wealth Management Connect was launched in September 2021. And this allows eligible mainland Hong Kong and Macau residents in the Greater Bay Area to invest in wealth management products distributed by banks in each other's markets through, as we were just discussing, a closed loop funds flow channel established within the respective banking systems. This is a really great example of the intention of the Greater Bay Area, which is to take the relative strengths of each centre to make a whole that's greater than the sum of the parts.
Yes.
So Wealth Management Connect leverages the depth of Hong Kong's financial services expertise to provide investment solutions to the high concentration of high net worth individuals resident in places like Shenzhen in particular, many of whom are from the tech industry.
Yes.
A breakthrough that this cross-boundary Wealth Management Connect offered is the degree of flexibility given to individual retail investors to open and operate cross-border investment accounts directly and to choose their preferred products. Right. In January of this year, enhancement measures were announced to refine the eligibility of the mainland investors and expand the scope of participating institutions and the eligible products. Also to increase the individual investor quota and enhance the promotion and sales arrangements. So I expect that, like the other Connect schemes, expansion along these critical lines will continue over time, creating more and more opportunities for Hong Kong-based financial institutions to serve the needs, the investment needs of mainland investors.
Yeah. Well, that's exciting because not only, say, like tech companies, that means funds in Australia can tap into the Chinese investors through the Connect program in Hong Kong. Obviously, there are some sort of procedures and registration to be satisfied. However, that actually opened up another sort of a source of investment for Australian funds.
Yes.
Yeah. That's great.
A significant source, yeah. And hand in hand with this is, again, on the policy track, development of Hong Kong as an asset, wealth management and family office centre, another area of really strong policy focus from the Hong Kong government. In March 2023, the Hong Kong government unveiled a new family office policy statement spanning a profit tax exemption for family-owned investment holding vehicles managed by single-family offices that doesn't require any pre-approval, a capital investment entrance scheme to invite asset owners to migrate to Hong Kong, and other market facilitation measures. Yeah. And the response to this has been impressive. There is, as I'm sure you're aware, very active competition amongst this region and other financial centres for the growing wealth management market. But Hong Kong has very quickly become the second largest cross-border centre for wealth management, trailing close only to Switzerland. And the FT reported recently that Hong Kong could overtake Switzerland. And in fact, UBS is announced in August, just this month, that they'll be relocating one of their global leaders of their wealth management business to Hong Kong, just as a symbol of how important this centre has become to their business, UBS, of course, being a world leader in wealth management. So over the past 3 years, which I think we'd all acknowledge has been within a fairly challenging macro environment, there's been an increase of around 24% in the total number of hedge fund managers, private equity managers and family offices in Hong Kong. So still reasonable growth through an otherwise difficult period. The SFC has reported, so our Securities and Futures Commission has reported net fund inflows grew more than 300% in 2023 to 389 billion Hong Kong dollars. And there was strong contribution within that from private banking and private wealth management businesses. So all of this speaks to the growth of this industry in Hong Kong, and that leads into the entire ecosystem. And so in addition to the advantages of living and working and establishing businesses in Hong Kong, I think it's important to remember the proximity and accessibility to mainland China for understanding the world's second largest economy. So not just for its investment potential, but also its impact on the rest of the world's markets and economies. That remains a good reason for fund managers to build a presence in Hong Kong.
So agree. I mean, chances are you look at a market of 1.4 billion population, it's sort of present a lot of potential for overseas companies to tap into that market for investment or for even just the market itself in terms of consumption. So I'm sure when people get to know this better, more and more Australian companies will be visiting Hong Kong and look at opportunities that could be available. And on that note, I would like to know what, for Australian companies who are coming to Hong Kong looking for opportunities, what the Chamber can offer to all these companies.
We are a great launching pad. Yeah. So we encourage companies to get in touch with us. We can make introductions to our expansive and trusted membership network, but also more broadly with Australian and Hong Kong government agencies that are there to help guide people through the opportunities in Hong Kong. We provide access to industry briefings and subject matter experts. You and I have both been involved for some time. You're our current co-chair of the Finance, Legal and Tax Committee, which is a very active committee that touches on, we've discussed all of these subjects to some extent within our committee, which forms a strong part of our ongoing dialogue with the government. So we also provide information on government policies and connection with the government to support international business, and most particularly the business ties between Hong Kong and Australia.
Yeah. Thanks, Jo, for your very encouraging and informative sharing. I'm sure you will be able to invite you to share with our audience again on any developments in Hong Kong. So again, we will thank Jo Orgill, the chair of the Australian Chamber of Commerce in Hong Kong. Thank you.
Thanks, David, and I look forward to reporting on those developments.
Absolutely. Thank you.
Thank you.